So you have your CSA scores and you have your basic categories and their measurements. So now let's talk about what most fleet owners actually want to know. What do those scores cost you? Okay, but before we get started, please like this video and subscribe to our channel where we talk about trucking and insurance and explain how the two really go hand in hand. So the answer plays out in three distinct areas: your insurance premiums, your relationships with customers, and your reputation in the market. Okay, so let's take them here one at a time, starting with insurance. Commercial trucking insurance is one of the biggest line items in your operating budget, and CSA scores are one of the most significant factors underwriters will use to price your risk. And here's why. Because insurance companies are in the business of predicting losses, and your CSA data gives them a data-driven picture of how likely your fleet is to be involved in a claim. When an underwriter pulls your scores, they're not just glancing at the totals, okay? They're looking at the trends. Are scores improving or are they getting worse? You know, are violations concentrated in one basic category or are they spread across several? Is your crash indicator rising alongside your unsafe driving score? Because if it is, that's a pattern that tells a very specific story. Carriers with elevated scores, especially in unsafe driving, HOS, and vehicle maintenance, can expect that to show up in their premiums. In some cases, carriers in alert status may struggle to find coverage at all or end up in a limited to specialty markets with higher rates. And here's something worth knowing, okay? Insurance companies don't just check your scores at renewal. Many monitor them throughout the policy period. A sharp spike in violations mid-year can prompt a conversation and potentially a mid-year adjustment. For insurance brokers watching this, CSA scores need to be part of every trucking client conversation. Okay, presenting a client with deteriorating scores and no explanation or improvement plan is a tough sell to underwriters. But a client who can show improving trends and demonstrate that they're actively managing safety, that's a much easier conversation to have, okay? So now let's talk about customers. The freight market is competitive, and shippers and brokers have more tools than ever to vet the carriers they work with. CSA scores are one of the tools, and they're used a lot, and they've been used a lot in the past decade. Now, many large shippers have formal carrier qualification programs that include CSA scores, and if your scores exceed their cutoffs in certain basic categories, you don't make the approved vendor list. Okay, it doesn't matter how competitive your rate is or how long you've been in business, the score creates a hard stop. Freight brokers operate similarly, okay, with shippers holding brokers increasingly accountable for who they put on their load. Brokers have a strong incentive to screen out carriers with elevated scores. Some use automated systems that flag carriers based on the SMS data before a human even reviews the profile. The practical consequence is that high CSA scores can quietly shrink your access to freight. You might not get a direct explanation from a shipper or a broker. They may just simply stop calling. And if your scores are the reason, that silence can be very expensive. On the flip side, carriers who maintain clean scores can use that as a genuine selling point. In an industry where safety credentials matter, being able to say our scores are consistently towards the bottom of our peer group is a real competitive advantage and something worth saying in sales conversations. Now let's talk about the reputation. And this one surprises a lot of people because the CSA data is public. Anyone can go on the FMCSA's SMS website and look up your company's scores. Your percentile rankings, your violation history, your out of service rate, it's all there, visible to anyone who wants to look. Okay, that shapes your reputation in ways that go beyond any single business relationship. Drivers looking for work research carriers before accepting employment. Owner-operators deciding who to lease under look at SMS data. Even other carriers evaluating potential partnerships may check. So your CSA profile is, in a very real sense, part of your company's public identity in this industry. And here's what makes all this especially significant is the effects compound. Okay, a fleet with an elevated score pays more for insurance. Higher operating costs puts more pressure on the margins. That pressure can lead to cutting corners on maintenance or pushing drivers harder on delivery times, which drives more violations, which pushes scores higher. It becomes a cycle that's genuinely hard to break once it gets going. But the opposite is also true. Carriers who invest in safety and training and compliance tend to see their scores improve. Lower score means better insurance terms and broader access to freight. It means stronger customer relationships, less regulatory scrutiny. The business case for proactive safety management is about building a more sustainable operation. For fleet owners, your CSA scores are a business asset. Treat them like one. Monitor them regularly. Understand what's driving any negative trend and take corrective action before scores reach alert thresholds. The cost of proactive management is almost always lower than the cost of damage control after the fact. For insurance brokers, understanding where your clients stand you need to understand where your clients stand and help them interpret trends and connect them with resources, improve their score position as a real partner in their business. So in our next video, we're going to look at the actual steps fleet owners can take to move their scores in the right direction, including how to challenge inaccurate data, how to build systems that prevent violations before they even happen, and what a real culture of compliance looks like. I'll see you next time.